Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. Alright, it's that time again. Q3 earnings report around the corner. So I'm going to go through my usual process of trying to estimate what earnings might be this quarter. Last quarter was actually a fairly easy one to predict, at least for automotive revenue, and just about all estimates were very close to one another, again just for auto revenue. I think this quarter will be different, and a little harder to estimate, but we will do our best. Obviously, this will be Tesla's record quarter for earnings, just like last quarter, supplemented by their record deliveries, again just like last quarter, and likely to set new records again the following quarter. But what sort of increase might we expect quarter over quarter, and what effect could this have on the stock price? I don't know the answers yet. I'm going to go through it all with you, so let's get started. I was first going to wait until we got our breakdown from Model Y and Model 3 in Shanghai for September, but this is just 1 month from one factory, and I feel fairly certain I can guess it pretty well anyway, and I couldn't wait any longer to find out these results. For those of you who haven't seen how I calculate my estimates, I first work out the difference of deliveries between each factory for each model, and then estimate the average selling price of each vehicle from each factory, which I multiply by said difference, to then give us the difference in auto revenue from the previous quarter. I've tried other various methods that sound more logical or pragmatic, but this method always seems to get the closest for me. Alright, so we're dealing with 241,300 deliveries to derive an estimated profit. Now, even when Tesla provide us the official earnings report, bear in mind it isn't 100% accurate status of how Tesla are performing, because they actually produced a few thousand fewer vehicles than they delivered, unlike the previous quarter where they delivered 5,000 fewer cars than they produced. Just that alone is an additional 8,000 vehicles from last quarter due to inventory fluctuations. Except on top of that, Tesla managed to produce 31,000 more vehicles this quarter as well. So yeah, I'm expecting a good one, given that now totals about 20% more vehicles delivered. Alright, so we have our delivery numbers. Now we need to break them up into model and factory as best we can. We start with Fremont and begin with the Model S. This one's very easy. Tesla delivered 9,275 Model S's. Now to break down the Ys and 3s. Fortunately, we're told the number of sales coming out of the Shanghai factories. This intel is honestly great and helping to evaluate what is going on at the individual factory level. Although unfortunately, I think we may lose this over time, as Tesla will eventually consolidate these numbers with Berlin and Texas, so it might make it hard to know how each individual factory is performing. But anyway, Shanghai did a total Model 3s and Ys of around 134,812 in Q3. The Model 3 and Y totals from both factories were 232,025, which leaves 97,213 for Fremont. This is a particularly low number for Fremont. Last quarter, Fremont delivered 103,000, and in my deliveries estimate, this was the discrepancy I missed. I was only 1,000 deliveries off the S and 1,000 deliveries off China, but ended up off by 10,000 total due to such low numbers from Fremont, which caught me off guard, and actually has given me renewed faith in my predictions. Yeah, bear that in mind, Fremont had a bad month. There should have been another 10,000 deliveries from there, as Model Y should still be ramping too. So despite how good this quarter was, Tesla are at a higher level. Of course, we also have yet to see the Model X ramped up again. Yeah, S and X production has been disappointing this year. We've just about lost a year of production from them, in what was meant to be just a few months downtime. Oh well, I'll forgive Tesla, as they have had an outstanding performance elsewhere. I therefore think that Fremont had some downtime, and I believe this may have been the Model 3. What had we recently been told about the Model 3? Well, Tesla moved the standard range model from 2170 batteries to CATL's LFP batteries. This happened, and I'm sure it would have required some reasonable downtime. I'm impressed they did it this fast, really. Now, this is based on a theory. I don't believe there was anything reported about any significant downtime in Fremont last quarter. So what this means for our numbers is that I'll be taking this discrepancy out of the Model 3 sales, not the Model Y. My estimate for the Model Y from Fremont last quarter was just under 55,000. I expect there should have been some ramping, so I'm going to increase this to 57,000 again, which takes Model 3 down to 40,000. And it was around 49,000 the previous quarter, plus some of this is coming from inventory. Moving on to China, well, we have been given a breakdown of all Shanghai models for each month, except of course September. Now, my estimates for September are 23,000 Model 3s. I know we're hearing 800 a day, but there is some downtime, and Tesla don't appear to have been ramping up Model 3 all year. The estimate would be consistent within the deliveries we've seen for the year, in fact, a tiny fraction above average even, which would leave 33,000 for the Model Y. That number correlates with the run rate of 1,000 a day that was increased to 1,600 a day later in the month. I feel confident these numbers will be very close either way. That brings the total Model 3s for the quarter from Shanghai to 66,196 and Model Ys to 68,616. More Model Ys were produced last quarter than Model 3s in Shanghai. China really is ramping up to be the export hub. I guess Fremont's growth is going to be superseded by Texas soon anyway. There you go. That's my estimate of the breakdown of the vehicles from each factory, of which you can also compare to the previous Q2 deliveries. As you can see, we have a difference in deliveries from the previous quarter now. Next is to calculate the average selling price. Now here we need to estimate what the price was when these models were ordered, not the price of when they were delivered, or the price today. And as we know this year, Tesla has been increasing their prices across the board all year, allegedly due to component shortages, but I'm sure they're squeezing a bit more profit in there too, increasing the price closer to the market clearing price, where supply meets demand. These autos delivered were likely ordered around Q2, so I think we will try and get a cross-section of what the price was then. Let's start with Fremont. Now, the Model S Plaid is still going to actually be the original price, as when it was launched at $119,000, and Tesla have not likely come close to delivering all those orders yet, although the price is now $129,000. The Model 3 standard range went from $38,000 to $40,000 so far this year, but I think $39,000 will probably be about right if we trace back from where the rating list might be when the cars were ordered that were delivered in Q3. The long range went from $47,000 to $50,000, but the waiting list was not as long, so we can use one of the more recent price increases, which I'm putting in at $49,000. Performance model only went from $55,000 to $57,000, and we can actually take that last number, as it's been that price for a while. Just remember, we're trying to estimate the prices when these customers ordered, not when the cars were delivered. Although the price of the Model Y long range is now $54,000, up nearly 10% from the start of the year when it was only $50,000, the waiting list for the Model Y has still been increasing. The performance version has increased only $1,000 since the start of the year. Does that make you think a little? There is a component shortage. Component prices have risen. Tesla need to pass on these costs to the consumer. $4,000 for the long range, but only $1,000 extra for the performance? The price rises are not consistent with the reasons for the prices. Yeah, like I said, I'm pretty sure Tesla are adjusting their prices closer to meet demand. And sure, perhaps the component costs have increased somewhat, but the demand for this vehicle is just so strong, Tesla can easily raise the prices. Oh, and demand has actually risen since the price rises too, as the waiting list continues to increase. You see, remember, demand for EVs is increasing exponentially too. Anyway, I'm going to estimate $51,490 for the long range, which was the price in May. But the price has been increasing a lot, so this is an attempt at an average. The performance version is easy, as it's been $61,000 since April. As for China, Tesla actually decreased the price of the Model 3 standard range from 250,000 yuan to 235,000 yuan. This was in July though, so I'm not sure how many of those orders would have been at that price. Perhaps we should split the difference to be safe, which comes to $37,664. Tesla stopped selling the long range in China, possibly because of the powertrain shortages, and the performance has not changed price at around $52,780. Now, the Y from China might actually have a lower average selling price than last quarter, as we have the standard range Model Y, but deliveries for those were only in September and the end of August, so we expect a relatively low proportion of standard range sales than we expect to see next quarter. The prices have remained consistent too. And with that, we have our average selling prices for each model from each factory. We already have the difference in deliveries from the previous quarter. We can use these figures to multiply the difference in revenue from each model for each factory when compared to the previous quarter. The total revenue difference comes to over $2.3 billion. Wow. Auto revenue is already 20% above the previous quarter. This is looking good. Now we want to add FSD revenue. I'm still using 50% deferred revenue, but we have had some major FSD updates. I wonder if Tesla were able to release some of the deferred revenue as a result. As it was mainly rolled out as beta in limited use, I'm going to guess no, but I think it likely for next quarter. I've increased the FSD adoption rate for the made in China models, as a lot are going to Europe where adoption is higher. We're only applying the FSD revenue onto the difference of units sold, as if you recall, we're trying to work out how much extra revenue Tesla generated this quarter from the last. As you can see, it comes in only at $21 million. The reason being that Fremont had fewer sales last quarter and has a higher adoption rate of FSD. Now we have the extra estimated order revenue. I would usually just add it onto the previous quarter revenue, but the issue is we have these price increases. The US models saw about 4% price increase, but the Chinese Model 3 did drop in price, and the average selling price of the Model Y dropped due to the standard range model. Therefore, I think the price differences might have balanced themselves out, but I may be a little bit on the pessimistic side. Adding the increased revenue onto the Q2 order revenue brings us to $12.2 billion in order revenue. Alright, the infamous regulatory credits, I'm guessing have decreased slightly still. This was never a revenue stream Tesla relied on, it was just some bonus money that helped fund growth. I'm estimating $300 million, bringing total auto revenue to $12.5 billion. Now, last quarter, we had a very impressive 28.4% margin, but I think this quarter will be even higher. We have the high profit margin Model S ramped up more, which was actually making a loss last quarter. We have increased prices on US models. We have higher profit margin LFP batteries, along with all the other extra efficiencies Tesla added. I'm going for 29.3%, but I would not be too surprised if it actually broke 30%. But there may have been some other costs with the Model 3 LFP battery pack transition too, which I haven't factored in. This brings a gross profit of $3.6 billion, up 25% from the previous quarter. Seriously, a 25% increase in gross profit over a quarter. This is remarkable. Energy generation and storage was reasonably high in Q2. I'm not sure if there has been much growth. I'm just going to lock in the same figure as Q2, $800 million. It will have not much effect on earnings anyway. Services and other has been growing well though. I'm going to take that up to $1 billion from $950 million previously, bringing total revenue to over $14 billion. Now in Q2, Tesla actually made a profit on the energy and nearly with services too, which was unusual and very good news. I think they might make slightly more profit this quarter too. Tesla's used car business is growing, and with more supply of LFP batteries, the energy business reduces costs. I'm placing services as break-even for the quarter, and although we kept the same energy revenue as the previous quarter, I'm going to lower costs slightly. This leaves us with a total gross profit of $3.7 billion. Oh, we're nearly 30% above Q2. This is going to be crazy. Can't wait to see what it comes to. Alright, let's get to OPEX. I'm actually going to keep R&D, SG&A the same as Q2. Now we have Bitcoin. I think Tesla are placing Bitcoin under restructuring, although I believe Michael Saylor from MicroStrategy accounts for it under goodwill. But last quarter, we had a loss of $23 million, as we had to take the lowest price of Bitcoin for the quarter. Bitcoin has been a bit like a hockey stick lately, so this could be huge, right? Bitcoin is valued from the low of the quarter. In Q2, the low was 30,655. In Q3, the low was, unfortunately, 29,516. So I think this is a loss for Bitcoin of $48 million. That's a bit of a shame. The low of Q4 is, however, 47,750. Well, that is a huge jump in the Bitcoin price for next quarter. And we should expect over $500 million for next quarter. Of course, Bitcoin is much higher than that again presently, and I believe is on a path in excess of $80,000 for the year. But it is what it is for now, a loss. This gives us operational income of $2.1 billion, up over 60% from Q2, getting even more crazy. I'm going to keep net interest the same as the previous quarter, and we're left with an income before tax of over $2.1 billion, now up 65% more. I think for the depreciation and amortization, it may be higher than the previous quarter because Tesla paid off Giga Shanghai. Anyway, that leaves us with a net income of almost $1.9 billion and an EPS of $1.67, over 60% more than Q2. What happens to a stock price when the earnings increase 60% over a quarter? I've also included non-GAAP earnings of $2.3 billion and non-GAAP EPS at $2.09. I think this should take the stock price finally to a new all-time high. It could even break $1,000. If not this time, then later in the year, perhaps with the new factories opening. Just in my humble opinion. Okay, that was really hard work and concludes my estimates for this quarter. Incredibly impressive. Despite Model 3 line being down, still no Model X, Model S not fully ramped, Bitcoin not able to realize full profit. Oh, and have I mentioned lately that tests are about to quadruple capacity next month? Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.